Trade Live. Let's focus on Salesforce. The company is set to report third quarter earnings this afternoon after the closing bell. We'll have the numbers for you momentarily, but here's a look at the chart. Salesforce, more than 25% up this year and 10% over the last month. The stock rallying to an all-time high after third quarter earnings last December. We are currently just on the line to the downside at the moment for Salesforce. That's the focus of the morning trade. So joining us for a closer look at this name is Schwab Network's host, Marley Kayden. Marley, let's set the table for Salesforce earnings. What is the expectation going into this report?
The expectation is cautious, Sam. Good morning to you. EPS expected to come in at $2.85. That's below the $2.91 they reported last quarter, but it is higher than the $2.41 that they reported the same quarter last year. As far as revenue expectations, looking for $10.26 billion. That would mark a gain of about 9% year over year. But they have had some trouble. Their recent forecasts have pointed to better times ahead. And like you mentioned, last quarter, they did put out good numbers, but the street didn't like them. They saw some big moves to the downside. Year to date, they're down more than 29% because Wall Street isn't really optimistic about the potential future of these SaaS, these software companies. And there's a very cautious narrative surrounding them and what the AI trade might do to companies like Salesforce. Now, they did come out in October at their Dreamforce conference and say that their AI could help grow their overall revenues by 10% annually to $60 billion by 2030. Investors did really like that, but they will be keeping a close eye on any of their remaining performance obligations, their near-term backlog. Those are going to be important numbers here. But the pessimism has been hitting Salesforce all year. I mean, it has made it the second worst performer on the Dow Jones and puts it among the 25 worst performers in the S&P 500. So it has been a very tough year of performance for them, despite last quarter having a good report card. That sell-off has taken their market valuation to the lowest level that it's seen since it went public in 2004. So the stock currently trades right now less than 19 times its estimated earnings over the next 12 months. It's far below its 10-year average of 47 times that. So I was starting to see some notes that lower price tag, that the cheapest it's been since it went public, combined with some of that positive forecasting from analysts saying that it is a potentially positive setup for their earnings today. But still a lot of caution around Salesforce. There's a lot of concern that any of these companies, these AI, will make traditional software products obsolete. And obviously, that's what Salesforce's bread and butter is. So they did raise their prices, top tier plan, starting in August. That will be impacted in this quarter they're about to report. So expectations are that should be up at least about 9%. I think the street whispering for double-digit expectations there. But with the stock having never been cheaper, it's a very interesting setup in terms of a price play here, just because, we've seen a lot of people jump in this buy the dip scenario. And as far as Salesforce, the dip's never been lower.
Yeah, it's interesting, and you can understand some of the caution, can't you, Marley? Just because, as you say, I mean, software as a whole has been struggling this year. But, we have heard from a number of sort of companies' names in this space this earnings season. And, there have been some mixed reports. But is there anything that you can sort of take away from what we've heard from others in this space that, might give us some clues, some hints as to, what they're likely to say here, how they might actually perform, how they might actually be looking to sort of mitigate some of the challenges we're seeing here, and anything else that the sell-side analyst community is saying? Because I did see a couple of days ago, obviously, we were reporting about how, Oppenheimer had lowered the price target here ahead of earnings. I'm just wondering if there's been any other sort of commentary regarding this sort of pre-report card.
There has been some. We heard from Deutsche Bank. They called out what they called the excessive negative sentiment around the stock in their note this week. And they say that narrative has been tough to overcome, but they don't necessarily subscribe to it. We also heard from BNP Paribas. They said they see a turnaround on the horizon, that they believe Salesforce is, quote, the best position to reverse the SaaS narrative. And they think that they're well on track to reaccelerate their subscription revenue into the double-digit range by 2027, thanks to the adoption of its Agentforce AI offering, which is some of what the company has been saying on its own. But there are clearly believers here. The average price target right now is $325. Salesforce trading at $234. So, I mean, that's implying an almost 40% gain from where they are. And it puts it among the top 10 components of the S&P 500 tech index by that measure.
Yeah, I mean, Oppenheimer, while lowering the price target, is still looking at $300. I mean, they've also said similarly to Salesforce is a business transitioning to Agentforce, and they should still be a winner in the AI transition. I suppose we just have to wait and see what they say in some of the accompanying commentary when they report this quarter later on today. Thanks so much for getting us across that name and the setup, Marley. I'll speak to you later.